Hi everyone, this is Mohammad Zahid Imtiaz with another practical and cross-functional topic for the finance professionals. The topic is reviewing export LC draft. It includes basic guidelines. We received export LC draft from our overseas customer after conclusion of a deal with that customer. I have prepared a checklist in this regard and will go through the points one by one. First thing we should check is that the document received should be LC draft and not the transmitted SWIFT. If it's not draft but a transmitted Swift message, in case if some changes are required, extra cost and time will be involved because in case of transmitted Swift, any changes can only be done through LC amendment. We should make sure that the LC is irrevocable rather than being revocable. Irrevocable LC is the LC which cannot be modified or cancelled without the consent of the beneficiary. In this case, we are beneficiary. Next point is that we should check that applicable rules to LC or UCP latest version. If it's a case that some additional rules or conditions are applicable, we need to make sure that we can comply those conditions subsequently at the time of lodgement and presentation of export documents. Now it's the time to refer to the base document, which is our sales contract with the customer. We should make sure that all the relevant information mentioned in the LC draft and sales contract is consistent. This relevant information contains customer name, address, phone number, goods description, quantity, rate, amount, currency of transaction, payment terms, loading port, and destination port. It is also important that we make sure at this stage that mentioned payment terms are consistent throughout the document. Then comes due diligence about issuing bank. We should make sure that the issuing bank of this LC holds appropriate credit rating and is acceptable for advising bank. In this case, we should take a comment of the credit department of our bank. Rating is particularly critical if we plan to discount the export document at lodgement stage. If the credit rating of the bank is okay, we'll get the documents discounted effortlessly. We should also check whether the issuing bank is as per agreed sales contract or not. LC should be directly advised to our bank rather than having a first advising bank, which is normally an intermediary bank. When LC is not advised directly to our bank, it will double our LC advising charges and will also create some administrative hassles. LC expiry date means the last date to submit the export documents with the bank for negotiation. If LC gets expired, it becomes void. So we need to make sure that we have sufficient time to complete the transaction before the date of expiry of LC. And here is my next slide. Latest date of shipment is the last date of making shipment against the LC. At this draft stage, we should check whether we can manage the shipment within the latest date of shipment mentioned in the document, or else we can request the customer to get it extended. Latest presentation of LC refers to the period after the date of shipment within which the document must be presented for negotiation and processing. After the date of shipment, our logistics and distribution department should have 5 to 10 working days to lodge the documents to avoid any procedural issues. Then comes a partial shipment and transshipment. Both should be allowed ideally. Partial shipment refers to a scenario where we can ship the agreed upon quantity, the contractual quantity, in more than one lot and in different dates. A transshipment refers to a scenario when cargo or container is moved from one vessel to another while in transit to its final destination. If both partial shipment and transshipment are allowed as per LC draft, this will avoid many problems at the later stage of our transaction. My friends, LC may contain a tolerance clause which allows a certain percentage of deviation in terms of quantity and amount from the contractual figures. We should make sure that this tolerance permitting clause is present in the LC because it is exceedingly difficult to ship the goods exactly as per the quantity mentioned in the LC. So existence of tolerance clause will make our life easy. A certain variation of quantity and amount shall not make a document discrepant. Then we have confirmation clause, which is particularly relevant if we are dealing in high risk countries. If we make sure that the confirmation is allowed in the LC at the LC draft stages, the LC can subsequently be confirmed by a bank other than the issuing and advising bank. If, in case the payment is not made by the issuing bank as per the terms, the confirming bank will pay us because the confirming bank has confirmed the LC against a set amount of charges. So we should have this clause open for us to play if required in the future. Then comes typo error. It's a clause which refers to the existence, it's a clause basically existence of which will reduce our risk of getting our documents discrepant due to small typographical errors. So we should make sure that this clause exists in the LC draft. Advising charges and discrepancy fees should be checked to make sure that they are not unreasonably high. Benchmarking can be performed in this regard. For a single transaction, such charges seem immaterial. But imagine a scenario of handling hundreds of LCs and the implication of cost shall be substantial and important. And then comes the next slide. We should have a look at the lodgement and encashment side as well. For example, we are in country X, our customer is in country Y, and as a large multinational company, we are banking with numerous banks in multiple countries, for example, country A, country B, and country C, and so on. Let us assume that we intend to give this export document to our bank in country A. Primarily because we have a working capital finance limit available there and will get paid immediately after lodgement. Such financial plan can only be possible if we make sure that clause 41D of the LC contains any bank in country A or simply any bank. Then only we'll be able to lodge the documents with the bank in country A. My last thought is we should go through the LC draft in detail and make sure that there is no ancillary clause which is difficult or impossible to comply or can give rise to monetary or compliance risk. Such ancillary clauses may relate to preparation of documents, bill of lading, certificate of origin, or it can be anything. The scope is quite wide. So that is it from my side about this topic. Thank you very much for your time. In case of any questions or suggestions, please reach me. My WhatsApp number is given. Thank you very much. Bye bye.